This is Alan Farley from FX Empire. Twitter reports earnings after Thursday's closing bell, with analysts looking for a very small profit. Looking back, right after the stock came public in 2013, it surged, posting a high right up here in the mid 70s. That marked the top for a very long time. We had this very intense downtrend that found support in the mid to lower teens back in 2016. Tested that level once, twice, finally turning higher in 2017, coming up to the mid 40s, just about to where the IPO was. Now it sort of waddled all the way back down to a 1 or 2 year low during the pandemic decline, finally turning higher, breaking out above these highs right here in September, and then surging into 2021, coming back up to this prior high, breaking out in January and February, and failing to break out in 1 month later in March. Now, price action since that time has been distributive. In other words, unbalanced volume and accumulation fixture readings have been turning lower. This is pretty typical when we come up to a major resistance level, because in order for a stock to exceed this level, it really needs some good earnings, and Twitter earnings have really not been that great. Now, we do have this bounce off the 50-week moving average, which is good. This is support level. Came up to the 618 retracement. We've now reversed in this pretty big weekly bar, and are sort of struggling right up in here as the weekly stochastics turns lower, giving off a sell signal. Well, none of this is really indicative of a stock ready to break out. There's a very good chance that Twitter could miss its quarterly user growth. There's the obsession with President Trump during 2016 to 2020 really made a lot of user growth numbers in U.S. media surge, and that period's over, and now these same outlets are reporting a lot of declines in readership or usership or eyeballs. And I think we can see the same thing here, and I expect Twitter to probably be wobbling around in this range, somewhere between the 50s and 60s for a long time. This could even mark a major top, but we really don't know yet. That might take the rest of the year to determine, because if the new premium serve rolls out and really adds to income, then we could get buyers coming back into this sort of mixed outlook.